Hey everyone, I'm John Ross, and today I want to walk you through a price chart of Tesla. That's because I think there is a double-digit decline on the way for this stock, and we have the potential to make even bigger returns off of the stock's decline. Now, before I get to the chart, let me just remind you, if you found this channel, if you like this analysis and you want to see more of it, make sure you click the subscribe button so when you come back, you can find us, or hit that notification bell, and that way you'll be notified every time we post new content to this channel. Now, here's that chart. Something I want to draw your attention to, it's the ABC pattern that I've drawn in there, and I call this an AMP, or an apex movement pattern, and it's really just the part of the system I use to identify turning points in a stock and help me get a sense of where a stock has gone and where it is going. So here on this chart, it suggests to me that we're going to see a 30% correction, plus or minus, in the days and weeks ahead. Now, how did I draw in this pattern? What makes me think that the stock is at a near-term top here, or at a stopping point? First, I'm going to draw in a retracement tool to see how far this bounce has, how much of this bounce has retraced of the preceding decline that we saw in February and March. And first, I'll draw your attention to that 61.8% retracement level. That comes in right around $700 per share, and that's basically where this stock is losing momentum right now. It did roll over this week and is sort of trading right around that 61.8% retracement level. Now I want to draw in an extension tool to just get a sense of what that initial rebound, which I've labeled as an A wave, where the existing price is relative to that initial rebound, then that initial pullback that I've labeled a B wave, and where that puts that C wave. And you can see I've marked that C wave at 161.8%. Now that is a logical stopping point. The initial place I look for the third wave of a move to top out is a 100% extension. As you can see, Tesla broke straight through that. And only now that it reached a 161.8% retracement level around 765 or so, that momentum is starting to wane here. So this suggests to me that if we see some selling pressure emerge in the broader stock market, we're going to start to see that weigh on Tesla here at this level. If you're long Tesla, I would consider taking some profits here. Just pat yourself on the back for making some money on this bounce, but be very, very cautious if you're staying long. Maybe tighten up your risk, tighten up your stop losses, because it does seem that we are in for a decline of about 30%. Now, let me draw in some levels to give you a sense of where how far this stock could fall. So I'll do that again by drawing first in a retracement level of this rebound we've seen from the low in March to the high this week. So that 30% decline comes in right at a 61.8% retracement level. So that kind of gives me an initial target of what to expect here. Now, if fear really sets in to drive this stock, then we could be looking at a much larger move. We might maybe see that initial move I'm talking about at 30%. Maybe as it reaches this sort of retracement level and this sort of congested area where we saw a decline from the initial bounce, maybe we get a bounce there, and then maybe we see some type of then extension to new lows. If we get that, then obviously it opens up the door to a much lower low after that. We could see that extend something like down here in June. And now why am I putting why am I going to that far down to below $300 per share on Tesla? Well, I'll draw in an extension again from the decline, starting with the decline we saw in February and March, to this C wave rebound. That puts a 100% extension of the A wave, or let's call it a wave one. If this was the first wave of the decline, and the second wave was this bounce, and we were to see a third wave unfold, chances are it would come in, if it extends, somewhere around $200 per share. Now that's a huge move for Tesla, and it doesn't really line up so much with a lot of ways that people are valuing this stock based on growth. But we're in an unprecedented environment, so I do want to caution you that this is a possibility. It's not the kind of my primary scenario for how this share price will act, but I do think we need to be open to at least a short-term decline here that'll take Tesla down towards $500 per share, then open up maybe the door to $375. But after that, it might be hard to see enough selling pressure come in on a stock that is very much loved, that can take it as far as $200 per share. But wanted to bring that analysis to your attention. Even if Tesla were to decline only 30%, that's not a bad move if you're shorting a stock. But I know not everyone likes to short stocks. One way you can play a short-term decline in Tesla stock is by buying a put option. I do believe a correction like this, a 30% decline could happen within 2 months. So if you're a speculative trader, or you have sort of kind of lean towards some short-term opportunities, it might make sense to buy a June put option somewhere right around the money. Maybe 7:30, as I outlined in an article in Winning Investor Daily today. That will give you a chance, if we see a decline like this, to double your money in a relatively short amount of time. So hope this kind of analysis sheds some light on how I look at stocks and how I look at prices. And again, if you like this, make sure you subscribe, like us, drop us a comment, or hit that notification bell. We'll make sure you get more of this. So that's all for now. Thank you for watching. Take care, and we'll talk soon.